In the world of financial markets, there is a fundamental difference between those who simply react to market changes and those who anticipate them. The most successful professional traders are not just good at analyzing charts or understanding numbers. They have developed a unique mental ability, the capacity to think multiple steps ahead, like a chess master planning their strategy. This ability is not a natural gift reserved for a chosen few. It is a competency that can be developed through deliberate practice, mental discipline, and a deep understanding of how markets really work. Today, we will explore exactly how you can develop this strategic mindset that separates amateur traders from professionals. When we talk about thinking 10 steps ahead, we are not referring to the ability to predict the future with absolute precision. That is impossible in financial markets. Instead, we're talking about developing a mindset that considers multiple possible scenarios and prepares for each of them. A trader who thinks ahead does not just ask, "What will happen?" but rather, "What can happen? And how will I react to each possibility?" This approach transforms trading from a guessing game into a strategic exercise of risk and opportunity management. Imagine a chess player who not only plans their next move, but visualizes how the game can develop in the next 5, 10, or even 15 moves. They consider not only their own strategies, but also anticipate possible opponent responses and prepare countermeasures. In trading, your opponent is the market, unpredictable, but not completely random. The first step to thinking like a professional trader is to develop what we call panoramic vision. This means seeing the market not as a series of isolated movements, but as a complex and interconnected system where each element influences the others. When you look at a price chart, an amateur trader sees only lines going up and down. A professional sees a story being told, a narrative of supply and demand, mass psychology, economic pressures and market cycles. Each price movement is like a word in a larger sentence, and understanding that complete sentence is crucial to anticipating what comes next. To develop this vision, start asking broader questions. Why is the market moving this way? What fundamental forces are at play? What future events could impact this trend? How are other traders probably interpreting this situation? One of the pillars of strategic thinking in trading is building multiple scenarios. Instead of betting everything on a single prediction, professional traders always work with at least 3 scenarios: optimistic, pessimistic, and neutral. For each scenario, they develop a specific action plan. If the market rises beyond a certain point, they know exactly how they will react. If it falls below another level, they already have a prepared strategy. If it moves sideways, they have a third ready approach. This mental preparation is not just about having plans. It is about training your mind to be flexible and adaptable. When you have already thought about multiple possibilities, you do not become paralyzed when the unexpected happens. Instead, you can quickly identify which scenario is unfolding and execute the appropriate plan. To think ahead effectively, you need to understand what really moves markets. Many beginning traders focus only on technical aspects: support, resistance, moving averages, but professionals know that behind every technical movement there is a fundamental force. These forces can be economic, such as changes in interest rates, inflation, GDP growth. They can be political, such as elections, regulatory changes, fiscal policies. They can be social, such as demographic changes, consumption trends, or even psychological, such as fear, greed, excessive optimism. The secret is to identify which of these forces are most relevant to the market or asset you are trading, and then anticipate how changes in these forces will be reflected in prices. For example, If you are trading technology stocks, you need to understand not only the company's numbers, but also broader technological trends, regulatory changes in the sector, and even generational changes in consumer behavior. Markets do not exist in isolation. There is a complex network of correlations and connections that links different assets, sectors, and even entire economies. Traders who think ahead spend significant time mapping these connections. For example, an increase in oil prices can affect not only oil companies, but also airlines negatively, alternative energy companies positively, and even currencies of oil exporting countries. Understanding these connections allows you to anticipate cascade movements before they happen. A useful technique is to create what we call impact maps. For any significant event or change, draw the possible consequences in different sectors and markets. Over time, you will begin to see patterns and connections that were not initially obvious. One of the most important aspects of strategic thinking in trading is proactive risk management. This means not only setting stop losses, but thinking deeply about all possible risks and preparing for them before they materialize. Professional traders always ask, what is the worst thing that can happen with this position? And then they prepare specifically for that possibility. This includes not only market risks, but also operational risks, such as connection problems, system failures, liquidity risks, such as not being able to close a position, and even personal risks, such as health problems, family emergencies. Thinking ahead also means building a portfolio that is resilient to different market scenarios. This goes beyond simple diversification by sectors or geographies. It involves diversifying by strategies, time horizons, and even risk factors. For example, you can have some positions that benefit from high volatility and others that prefer calm markets. Some that profit from prolonged trends and others that capitalize on quick reversals. One of the biggest differences between amateur and professional traders is in their relationship with time. Amateurs feel they need to be always active, always trading. Professionals understand that sometimes the best action is not to act, to wait for the perfect moment to execute their strategy. Thinking ahead means identifying not only what will happen, but when it is most likely to happen. This involves understanding market cycles, seasonalities, economic calendars, and even behavioral patterns of other market participants. For example, you can identify that a certain stock is undervalued and destined to rise, but also realize that there are future events, such as earnings announcements or regulatory changes, that can create unnecessary volatility in the short term. In that case, the smart strategy may be to wait until after those events to take your position. Another aspect of strategic timing is understanding that it is rarely smart to put all your capital in a single entry. Traders who think ahead build their positions gradually, taking advantage of different entry points to optimize their average price and reduce risk. This requires patience and discipline, but allows you to capture opportunities even when your initial timing was not perfect. If the market moves against you initially, you can add to the position at better prices. If it moves in your favor, you are already positioned to capture the gains. A frequently neglected aspect of strategic thinking is anticipating your own emotional reactions to different market scenarios. Professional traders know that emotions such as fear, greed, and FOMO can sabotage even the best strategies. Therefore, they not only plan how the market can react, but also how they themselves can react. They identify situations that have historically led them to make bad decisions and create systems to avoid these errors in the future. For example, you may know that you tend to hold losing positions too long, hoping they will recover. Knowing this, you can create automatic rules that force you to close positions when they reach a certain loss level, removing emotion from the equation. Trading is a mentally demanding activity that can generate significant stress. Traders who think ahead not only prepare for market scenarios, but also for the psychological impact of those scenarios. This includes developing stress management techniques, maintaining an exercise and adequate sleep routine, and having hobbies and interests outside of trading that help maintain perspective. One of the most powerful tools for developing strategic thinking is maintaining a detailed trading journal. This goes beyond simply recording profits and losses. It involves documenting your thought process, the reasons behind each decision, and an honest analysis of what worked and what did not work. After each operation, ask yourself, was my initial analysis correct? Did I execute my strategy as planned? What signals did I ignore that could have improved my result? What lessons can I extract to apply in the future? Over time, you will begin to identify patterns in your own behavior and in market conditions that lead to positive or negative results. This self-knowledge is fundamental to improving your ability to anticipate and plan. If you are starting to develop this strategic mindset, do not try to implement everything at once. Start with one or two concepts and practice until they become second nature before adding others. For example, you can start simply with the practice of creating 3 scenarios for each operation you consider. What happens if the market goes up, down, or moves sideways? For each scenario, have a specific action plan, thinking 10 steps ahead. Like a professional trader is not a skill that develops overnight. It is a continuous process of learning, practice, and refinement that can take years to master completely. But the benefits make the effort worthwhile. Remember that the goal is not to predict the future with perfection, but rather to prepare for multiple possibilities and react intelligently and disciplined when those possibilities materialize. With time, practice, and dedication, you can develop this strategic mindset that separates successful traders from others.